Hey everyone, welcome back. Ready for another deep dive. Today we're going to be looking at something I think a lot of us can relate to. Running a business is exciting, right? New ideas, happy customers, all that good stuff. But sometimes things can seem great on the surface, but under the hood, the finances aren't quite as rosy as they could be.
Yeah, like a car that looks great but has a sputtering engine.
Exactly. And that's what we're going to unpack today using a real-world example of a catering company in Memphis. They were successful, had great food, everyone loved them. But as our source material puts it, their financial ingredients weren't quite mixing right.
It's a classic case. You're passionate about what you do, you're good at it, and sometimes those financial nuts and bolts get overlooked a little.
Right, right. So what we want to do in this deep dive is figure out what lessons we can learn from their experience. What can you take away, no matter what industry you're in, from how this company tackled their financial issues. We're talking about identifying hidden problems, finding significant savings, and achieving much better cash flow. It's a pretty cool story, really. So let's start at the beginning. What was it that made them realize something was off?
Well, it was this feeling of unease, like they were successful, but they didn't really have a handle on their finances. So they took a good, hard look at their books. And, several issues popped up pretty quickly. The biggest one, and I mean, this was a big one, they hadn't been accruing sales tax properly.
Oh, wow.
Yeah, for over a year. And, not setting aside those funds, not accounting for them, it can lead to some really serious trouble with the tax man.
Yeah, over a year. That's a long time. That's a ticking time bomb for sure. And the article mentions their financial statements weren't very clear either.
Exactly. It describes them as about as clear as a cloudy soup stock. Like if you can't see clearly where your money is coming from and going, it's almost impossible to make smart decisions. On top of that, they were struggling with cash flow, which is so common for growing businesses, right? And for their size, they just didn't have the right financial controls in place. Like think of it this way. You wouldn't build a skyscraper on a shaky foundation. Those little oversights, they add up, and as you grow, they can become huge risks.
Absolutely. So they had a lot to fix. And the article calls their solution a two-course solution, which is a pretty neat analogy. Can you break that down for us?
Yeah, it's a good way to think about it because you need to address those urgent problems first. Then you can focus on long-term strategy. So the first course, emergency intervention, that was all about tackling those critical issues. They really dug deep into their past financial data, to figure out where things went wrong. And that's where they found that big sales tax problem and fixed it.
Okay, so that's step one.
Yeah, step one. And along with that, they focused on getting those financial statements in order. I mean, you need a clear snapshot of your finances to even know where you stand. And they also implemented proper bookkeeping processes, the basics, but so important to build a solid financial foundation.
Okay, so that's getting the house in order, so to speak. What about the second course, strategic growth?
So once they had that solid base, they moved to a more proactive phase. They brought in fractional CFO services, and that's where the focus shifted. It wasn't just about fixing problems anymore. It was about optimizing their finances for growth.
Makes sense.
Yeah, so a big part of that was improving their cash flow. I mean, cash flow is the lifeblood of any business, right? They also created financial forecasting models so they could predict their future needs and plan ahead, and they tightened up their cash management controls. And they established key performance indicators, or KPIs, to track their progress. Like, think of them as early warning signs if things start going off track, or, indicators of progress if you're hitting your targets.
I like that analogy. So they went from firefighting to really taking control of their financial destiny. And this article mentions some impressive results, right?
Oh, yeah. The results were immediate and significant. Like, just fixing that sales tax issue saved them around $20,000. That's what the article calls the appetizer, which really shows you how much they improved overall.
Wow. $20,000 just for fixing one mistake. That's a lot of money.
It is, and it highlights something businesses often forget. It's great to focus on revenue, but you can't ignore the compliance side of things. Taxes, they can make or break you.
Right, right. And what about a main course, so to speak?
So after just 90 days of implementing those strategic changes, their cash flow increased by 12%. I mean, that's huge in such a short time. But beyond the numbers, and this is really important, the owner finally had a clear picture of their finances. They knew exactly where the money was coming from, where it was going, and what was driving their profits.
Yeah, that peace of mind, that clarity, that's got to be priceless.
Absolutely. It takes you from being reactive to being proactive. You're in the driver's seat.
So we've talked about this one company, but the real value here is the broader lessons, right? What can our listeners, no matter what their business is, learn from this?
Yeah, the beauty is these principles apply across the board. The article lays out some really practical advice, and they call it Lessons for Every Business Owner. First up, regular financial review schedules. This means going beyond just checking your books once a year at tax time.
Right. Make it a habit.
Exactly. They suggest reviewing your financials monthly, doing a deeper dive quarterly, monitoring your key metrics weekly, even having annual strategic planning sessions. Basically, stay on top of things.
So it's about integrating financial awareness into your everyday operations. What about the next set of lessons? Essential financial controls. What are the essentials every business needs?
These are the safeguards, the things that protect your financial well-being. So, first off, separate your business and personal accounts. That's crucial. Then, keep detailed records of all transactions. I don't care if it's digital or good old-fashioned ledger, just be organized. And have clear approval processes for expenses, even small ones. Trust me, it helps control costs.
Makes sense.
And then, reconcile your bank statements regularly. It's simple, but it can catch errors or even fraud. And of course, back up everything digitally. You never know what might happen. Without these controls, you're building your business on shaky ground.
It's like setting yourself up for success.
Exactly. And then the last set of tips, which was clearly a big issue for our Memphis friends, tax management best practices. The article emphasizes tracking sales tax in real time. Like, set up a separate account for tax payments and don't touch it. And stay informed about tax changes, because they happen all the time. And keep good records of all your deductible expenses. It'll save you headaches later.
All great advice. Now, the article also talks about a three-step approach to financial success. Can you walk us through that quickly?
Sure. It starts with discovery and assessment. Take stock of where you're at, analyze your data, understand your strengths and weaknesses and what your goals are, then move on to strategic planning. Create a plan based on your assessment, both short-term and long-term, and set clear metrics. And finally, implementation and monitoring. Put that plan into action, track your progress, and adjust as needed.
It's a roadmap, basically.
Yeah.
Now, last but not least, the article talks about when to seek professional help. What are some signs that you might need to call in the experts?
Okay, so if you're unsure about your cash flow or profitability, that's a red flag. Like, if you can't easily say where your money's going, that's a problem. Unexpected tax bills, that's another sign. Or if you're struggling to make financial decisions, you might need help. And if you're spending all your time on bookkeeping instead of running your business, that's another sign. And finally, if you're planning big growth, it's wise to have expert guidance.
So many good points. And the article ends by asking the listener a very direct question. Are you feeling uncertain about your business's financial health? I think that resonates with a lot of people.
It does. And taking action, like this catering company did, is not a sign of weakness, it's a sign of strength. It's about taking control and building a stronger, more resilient business.
Absolutely. So as we wrap up, the message is clear.
Yeah.
Good financial management isn't just about numbers. It's about setting yourself up for success. It's about moving from uncertainty to clarity and making confident decisions.
It is. And here's a final thought for you. What seemingly small detail in your business could be hiding a big opportunity or a big risk, like that sales tax issue? It's worth taking a close look, right? Make sure your own financial ingredients are mixing properly.
So true. All right, everyone, that's our deep dive for today. Thanks for joining us.
Thanks for having me.
And remember, take care of your finances and your business will thank you.
Couldn't agree more. Until next time.